NIO stock secret plan revealed. This is the real reason why NIO stock is bound to rise. Are you interested in the latest NIO stock news? What is the latest in the world of stocks? And do you have any information, positive or negative, about the potential investment you will make in the stocks that you're interested in? Well, welcome back to Stock Market News, where today we are here with the newest updates and news which have been going on in the stock market these days. If you're interested in stock news, you're in the right place, so no need to go anywhere just yet, because we're about to tell you everything that's going on in the stock world. So, let's get into this video without any further delay. And before we do that, make sure you please hit that bell icon and subscribe to the channel to get every single update about the channel. Chinese electric vehicle automaker NIO offered a strong presentation of product upgrades, existing model revisions, and the formal unveiling of its long-awaited ES7 SUV via an online event broadcast. The all-new ES7 is now available for pre-order in China, and it will be equipped with NIO's cutting-edge EV technology. NIO is a publicly traded electric vehicle manufacturer launched in China in 2014. It has since established itself as a top electric brand thanks to the ES8, ES6, and EC6 SUVs. The ET7, the automaker's first car, was unveiled in January 2021. NIO followed up with its second sedan, the ET5, before the end of 2021. This smaller vehicle started its validation prototype phase in January and will soon join the ET7 on Chinese and European roads. Since the ET5, there has been a steady stream of rumors about a new all-electric SUV from NIO named the ES7. NIO announced in February that their new ES7 SUV would be unveiled in April. However, an increase in COVID-19 incidents prompted a shutdown in Shanghai, the location of NIO's worldwide headquarters. As a result, the premiere date was moved back to late May. Following a third postponement, we learned that NIO would finally reveal the ES7's key details in June, this time via an online event. The ES7 is NIO's quickest SUV to date. Following its online event from China, NIO released information about the ES7 in a news release. The new SUV is the first to use NIO's NT 2.0 platform and to embody the automaker's design for AD concept. The bodywork of the ES7 is distinguished by a shark nose front fascia, unique wheel arches, and air wing taillights. We also heard about some of the ES7 SUV's performance specifications. High-efficiency e-drive platform of the second generation with the SiC power module. Acceleration from 0 to 100 kilometers an hour or 0 to 62 miles per hour in 3.9 seconds. Braking from 100 to 0 kilometers an hour in 33.9 meters. Aside from a 75 kilowatt-hour standard range battery and a 150 kilowatt-hour ultra-long range battery, the ES7 boasts a number of premium amenities. It will be NIO's quickest SUV to date, as well as one of China's first licensed passenger vehicles capable of towing a caravan or trailer. The vehicle can not only power towed equipment, but it also supports vehicle-to-load discharging and camping mode to power external gadgets. The vehicle also offers an interior that looks and feels like a living room, complete with heated, ventilated, and massaging front seats. Pricing and delivery schedules for ES7, which, according to NIO, the ES7's initial MSRP in China, is as follows. $69,700 for a standard 75 kilowatt-hour battery before subsidies. Before subsidies, you could get one with an ultra-long 100 kilowatt-hour battery that would cost $78,350. Before subsidies, the ES7 Premier Edition cost $81,600, and customers who opt for battery as a service will pay a pre-subsidy fee of $51,800. The firm's excellent relationship with the Chinese government gives it an advantage in the country's huge market. China's aggressive push for EVs is a significant benefit for NIO. The strategic partnership with Mobileye for the development of driverless vehicles in China bodes well for NIO's prospects. The company plans to release 3 new products based on the NIO Technology Platform 2.0 this year, including the ET7 model. In truth, ET7 deliveries have only lately begun. NIO appears to be well positioned to establish a long-term presence in the rapidly expanding EV market. NIO currently has a ZAX rank of 3rd. Better-ranked players in the auto market include Wabash National Corporation WNC, which has a ZAX rank of number 1 or strong buy, and Fox Factory Holdings, Fox F, and Standard Motor Products SMP, which both have a ZAX rank of number 2 for buy. The complete list of today's ZAX number 1 ranked stocks can be found here. Wabash National anticipates an earnings growth rate of 239.3% for the current fiscal year. In the last 30 days, the Zacks consensus estimate for the current year earnings has stayed unchanged. Wabash National's earnings have been above the Zacks consensus estimate in 3 of the last 4 quarters, while falling short in 1. WNC delivered an average trailing 4-quarter profit surprise of 51.26%. Over the last year, the stock has dropped 9%. The current year's earnings growth rate at Fox Factory is predicted to be 14.9%. In the last 30 days, the Zacks consensus estimate for current year earnings has been revised by almost 1%. In each of the previous 4 quarters, Fox Factory's earnings were above the Zacks consensus estimate. Fox F delivered an average trailing 4-quarter profit surprise of 10.18%. Over the last year, the stock has been down 48.2%. For the current fiscal year, Standard Motors expects earnings to expand at a rate of 5.2%. In the last 30 days, the Zacks consensus estimate for current year earnings has been revised upward by approximately 3.1%. In each of the last 4 quarters, Standard Motors earnings exceeded the Zacks consensus estimate. S&P delivered an average trailing 4-quarter earnings surprise of 40.34%, and over the last year, the stock's been down 7.7%. Despite this, there are a number of compelling arguments in favor of putting money into NIO. In spite of recent pessimism, the firm maintains a strong position among the leading electric vehicle manufacturers worldwide. It would be detrimental to China if Chinese companies were coerced into withdrawing from the stock exchanges in the United States. It is possible that people may view it as a country that is not open to investment, which would not be in China's best advantage. The situation in Eastern Europe continues to be a source of anxiety for the market. If the government of China decides to side with Russia, this could have a detrimental impact not just on China, but also on its stock market. Because regulatory and geopolitical concerns have been the primary factors that have kept investors away from Chinese equities, rather than fundamental problems with the companies themselves, this may be an excellent opportunity to purchase excellent Chinese companies at much lower valuation multiples than were seen in the previous year. There are several reasons to maintain an upbeat attitude regarding NIO. This concept is supported further by the fact that there are more bulls than bears working on Wall Street. NIO recently made its debut on the Hong Kong Stock Exchange, where it is qualified for a dual listing. The company did this with the aim of decreasing regulatory risk and eliminating investor concerns. The global search for alternative energy sources has been given a sense of increased urgency as a result of the geopolitical uncertainty and the meteoric rise in oil prices. It's possible that this may give electric vehicle makers like NIO a boost. China has set a target of having 40% of vehicles sold in the country to be EVs by 2030, which implies that a lot more vehicles will need to be charged. The government hopes to have enough charging infrastructures in place by 2025 to accommodate the needs of more than 20 million cars. Currently, more than 70% of China's 810,000 public charging points are in densely populated coastal areas such as Guangdong and Shanghai. However, this is beginning to change. The National Development and Reform Commission and numerous other organizations released guidelines in January calling for charging stations to be installed in all counties and villages as part of the government's rural regeneration drive. Those investors who are prepared to deal with severe volatility and a very high level of risk are the ones who should consider putting their money into NIO right now. On the other hand, the proverbial adage that the bigger the risk, the greater the profit is applicable in this situation. An investment in NIO is fraught with peril because the company cannot control the outside forces that affect it. On the basis of its technology and, most notably, its level of market penetration in China, the company's fundamentals appear to have a high chance of capitalizing on the burgeoning electric vehicle industry. So, I think that brings us to the end of this video. What do you feel about the NIO stock? Is it a long-term investment that's worth it? Please let us know in the comment section below. We'd also like to ask you to please like and subscribe to our channel. And don't forget to ring the bell so you stay up to date. If you have any questions or comments, please let us know down below. And also check out our channel where you'll find some more extremely cool content.